Ladies and gentlemen, good day and welcome to the Eveready Industries India Q3 and 9 months FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki from CDR India. Thank you, and over to you.
Thank you. Good afternoon, everyone, and welcome to Eveready Industries India Q3 FY24 earnings conference call. Today, we are joined by senior members of the management team, including Mr. Suomai Saha, Managing Director, and Mr. Vivek Agarwal, Chief Financial Officer. Before we begin the call, let me first share our standard disclaimer. Some of the statements that will be made on today's conference call could be forward-looking in nature, and the actual results could vary from these forward-looking statements. A detailed statement in this regard is available in the press release, which has been circulated to you and also available on the stock exchange website. I would now like to invite Mr. Saha to share his perspectives with you. Thank you, and over to you, sir.
Thank you, Rupit. Ladies and gentlemen, thank you for joining our earnings call today. I am pleased to share with you our focus areas that have been critical to our journey. Through these opening remarks, I will also seek to bring up some pointers on our model and supplement that with the progress that we are making there. First and foremost, our commitment to enhancing our brand visibility and engaging with consumers remains unwavering. Secondly, we continue to strengthen our distribution channels to reach markets and customers effectively. Last but not the least, our investment in human resources continues to be a key item of focus as we prioritize talent development along with our organizational growth plans. These key pillars will continue to drive progress in the coming quarters. Brand Eveready continues to evoke high familiarity and recall in the categories where it is present. Our businesses comprising of batteries, flashlights, and lighting have benefited from this salience. As a leading consumption products brand, we are consistently working around to maintain visibility through advertising and promotions. This helps us lead the tricycle battery and flashlights categories. While we are a challenger brand in the lighting category, we believe we have a vast canvas of growth ahead of us. We completed our revamped route to market exercise in the last quarter of FY23, and since then we have created a lean and modern architecture that is more aligned to today's requirements and our growth aspirations. The larger towns saw a consolidation of distributors, thereby giving the continuing ones better opportunities to grow meaningfully. On the rural side and in smaller towns, we created a super hub model with a super acting as a distributor across a wider net of smaller dealers. This resulted in reducing our distributor strength from a 4,000 plus to just over 1,000. As highlighted in our previous earnings calls, there were challenges emanating from this improvement initiative, both from a design perspective as well as execution. We have tried during much of the current year to perfect the process, which has resulted in short-term pains from a growth perspective, but we believe we have overcome most of the issues. We expect the RTM exercise to fully stabilize in the next 1 or 2 quarters and start yielding results. Our journey is being championed by our team members, many of whom have joined us at the leadership levels in the recent past to augment our talent bank. The team believes that the foundation of excellence lies in well-executed processes. Our teams are empowered. They not only run processes effectively, but also bring creativity and innovation to the table. It is the synergy of empowered minds and robust processes that will propel us to sustainability. Another aspect of our process is that we are focusing to become self-reliant with our in-house manufacturing, whereby we become truly a Made in India company. More than 95% of our batteries and more than 70% of our flashlights are manufactured in-house. This provides us with complete control on costs and product offering, thereby an ability to serve our consumers as per their requirements. Now I shall turn your attention to the respective segments. First, batteries. Eveready has long enjoyed name ownership of this category. While we have stood strong in the large carbon zinc category, we have only recently begun to create a positive impact in the emerging alkaline space. Our revamped alkaline range of Eveready Ultima has met with healthy success, and we expect this trend to gain further momentum and for this category to contribute significantly to the growth of the business. We are also ramping up our communication in this space. Overall, the business supports an extensive range of batteries positioned to benefit from premiumization as well as volume growth from enhanced household consumption as we add new devices. The favorable input cost environment is giving us headspace to maintain the tempo of marketing and promotion. In the past, the dry cell industry has found it hard to mount volume growth due to subpar penetration of relevant devices in our homes. Our latest campaigns highlight use of devices like toys as an integral part of learning and living. Moving along, flashlights have seen a faster than anticipated degrowth in the battery-operated segment. However, we are confident that our gains in the rechargeable segment will more than compensate for this loss and provide substantial growth for the overall category. Our design and development team has continued to introduce new SKUs with feature functionality as per market feedback in the rechargeable category. This space is occupied by unorganized players and imports from China. The Eveready range stands for quality at the foremost, and we believe in creating products that provide value through features and pricing both. The quarter and the current financial year saw weak consumer demand, particularly in the rural part of the market, across most FMCG products. Consequently, this had impact on both battery and flashlight uptakes, both having ceded ground over last year, in batteries by 2.4% and in flashlights by 3.6% for the year to date. It is expected that the forthcoming quarters will see a de-escalation of heat price inflation and return to growth for consumer products. However, we managed to retain our market share of batteries at 53.2% as per Nielsen report. I am pleased to report that we have now a full range of products in the lighting category as per the needs of the market. The business boasts a dual distribution setup via the general trade and the electrical channel. This is a vast market, and although there are entrenched players, we are confident of making a mark. Our emphasis is now to shift our business salience from basic products to the premium ones. Our emergency lamp, being part of our premium range, is already one of the leaders in this market category. As already widely reported, the entire lighting market underwent value erosion on account of players passing on cost benefits arising out of manufacturing efficiencies. While the entire market was in the negative territory, we managed a growth of 10.5% for the quarter and 9.2% for the year to date. Let me now share some insights on our financial performance during the third quarter. Our top-line performance captures the impact of slower rural consumption in batteries and flashlights, as well as ongoing value erosion in lighting. This was further impacted due to disruptions faced on account of the new RTA. However, our portfolio of alkaline batteries, rechargeable flashlights, and lighting products reported strong volume trajectory, creating the base for sustained gains in the coming days. Despite the moderated top line, our EBITDA performance for the quarter stood strong at 24.6 crores with a margin of 8.1%, and the year-to-date number being at 114.8 crores with margin of 11.1%. Performance for both the quarter and the year so far being better than that of the last year. The performance was supported by favorable cost trend in key raw materials, especially in batteries, in addition to stable exchange rates during the quarter. In anticipation of higher A&P spends to accelerate our position in the industry, we undertook several cost initiatives to sustain our margin trajectory. As for the outlook, we seem to be on the anvil of getting back our growth momentum, with hopefully the market reviving and the challenges of the new RTM being overcome. We believe we have all the elements in place to be able to deliver positive results in the times to come. With that, I conclude my initial remarks here, and we now request the moderator to open the forum for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The question is from the line of Mithun Aswat from Kiva Advisors. Please go ahead.
Hello.
Hi.
Yeah. Can you hear me, sir?
Yes, very well.
Yeah. So just wanted to understand, sir, in terms of the margins for the current quarter, obviously, year on year, they have been better, but quarter on quarter, we see, some deceleration in terms of the EBITDA performance. Is that mainly because of heightened marketing spend? Or if you could just maybe throw some color in terms of what we are looking at in that. And also within segments, how was the volume growth in each of the segments this quarter?
Thank you, Vitul. See, as far as the margin is concerned, it was impacted by a mix of both. The 2 points that you mentioned. One is, at the percentage, we had higher A&P spend, and also obviously the muted top line, which I have sort of, drawn reference to in my remarks earlier. These two had an impact on the quarter's margin, which stands at 8.1%. However, if you look at the year for the 9 months, the margin stands at 11.1%. And as we have been guiding, we stay firm on our overall guidance that we will continue at double-digit EBITDA.
Right. And each of the segments growth this quarter were on year-on-year basis. Was there despite the pressures, was there volume growth in Q3 or in some of the volume growth was negative?
As I mentioned, there was, a degrowth in both batteries and flashlights, which was at year-to-date, it stands at 2.4% and 3.6% respectively. But the lighting category, though overall market was in the negative, we grew by 10.5% during the quarter and 9.5% for the year.
And just lastly, wanted to understand, are you, since now you've got these 3 categories, there was talk about you also trying to, look at some adjacencies to the existing businesses. I just wanted to understand any thoughts there. You've got into lighting. Is there anything else that one is looking at for the forthcoming fiscal?
So, as we have articulated earlier also, for the next 12 to 18 months, our hands are full to be able to exploit these existing 3 categories. Thereafter, the company would certainly look at, a 4th or a 5th category, but that is, beyond at least 1 year, not immediately.
Fine, sir. Thank you, and I'll join back.
Thank you.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So I had a question on the overall growth side. Right? So last 2 quarters, obviously, our numbers from a revenue growth perspective have not been very cool. So just wanted to sense that, and there have been RTM exercises that you've been speaking about. So just wanted to sense that, do you think that as an entity, Eveready will return back to double-digit growth at least in the next financial year? I'll talk about another question.
Okay, so we have highlighted even in the earnings call earlier and also today that there are two factors which have led to I would say the growth not being in the territory that we had been expecting. Actually, in the 9 months, including this quarter, our top line is absolutely flat. Correct. Now, the two reasons. One is, of course, there is a softening of FMCG demand, particularly in the rural side, which I had referred to earlier in my remarks, and also the RTM issues which came out. We tried to get the RTM done in a very quick span of time, which did not sort of work out. It required a lot of changes, and as a result, as and when certain, I would say issues came up, we needed to resolve that, and we consciously did that because this was an improvement effect. It was not something that was thrust upon us. It was something that the company spontaneously did because it meant that in the future the company would be much better ready to, take on the growth momentum. So I would say that this is a temporary pain. Of course, I cannot make comments on how soon the market is going to recover, whether on the lighting side or that matter the FMCG side. But I can say that the internal issues of RTM are by and large over, and we should see in the next 1 or 2 quarters that system working to its perfect efficiency. As for coming back to growth, we certainly will come back to growth in the fourth quarter. Now, it would not be obviously a double-digit kind of growth which you asked whether it is, but we would certainly look, at if the double-digit, at least high single-digit, even the way the market is behaving at this point of time, and take on from there.
Yeah, point sir, very input. And on the black side, then you also mentioned in your remarks with respect to the the kind of erosion that you are seeing in the battery operated flashlight. So, if you could just give us a color as to where the market stands today and what's your, what's the kind of contribution you have with respect to rechargeable flashlight and battery operated flashlight.
So, our estimate, there is no really syndicated data on this. Our estimate is that the market is about 1,200 of rates, roughly, of which 1/3 is battery operated and the 2/3 is rechargeable. Now, on the battery operated, we already have factored in a 10% degrowth for the market. And we thought that we would also flow with that similar degrowth because, consumer habits are changing, we can do very little on that. And we were quite confident that we would be able to make significant gains in the rechargeable segment, and we would by and large be, certainly be able to offset the loss made by battery operated flashlight. And because of the gains that we would make in the rechargeable side, the overall category is for us. Unfortunately, the battery operated category has grown far faster than what we had thought. In fact, the degrowth for the category in this year has been 20%, really double of what we had thought to be the result degrowth. As a result, the category stands flat for the moment, but that 2/3 of the market, the rechargeable one, there we are growing quite fast, and hopefully, with everything, on the moving parts that we had this year getting settled, next year we would certainly be able to, overcompensate all the loss that we would continue to make all the battery operated flashlights, and the whole category will grow.
Okay, but I think just a final piece for me, just on the bookkeeping side, if you could just give us the revenue split for all the 3 verticals and the margins for this quarter. And also, I think if you could just mention what's the share of your premium alkaline battery now in your overall category, that would be great. Thank you.
So alkaline currently is about 5% of the mix. And with regard to the category-wise breakup, of YTD, we have batteries at 675 crores, flashlights at 133 crores, and lighting at 245 crores, making a total of 1,050 odd. And as I said, in this, the battery receded by 2.4%, flashlights by 3.6%, lighting grew by 9.4%. And the margins are like this: battery is going at around 16%, flashlight at 9%, lighting is still negative 2%.
Thank you, sir. That was my questions and all the best.
Thank you. The next question is from the line of Sunil Gojwani, who is an individual investor. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. In a recent interview to CNBC a couple of months ago, you had given guidance from doubling the revenues in 3 to 4 years. So do we stand by that? And also, what kind of figures or strategies do we have to drive the growth? Which segment out of the three, according to you, will be focused and will be the driving the growth fastest?
Yeah. Okay. So, obviously, we had not outed this year to be one where there would be very small growth. We had outed for this year also a higher level of growth, which hasn't happened due to reasons which we have already articulated. And it is known and, it is due to a conscious action taken by the company to improve itself. With regard to the growth over a 3 or 4 years horizon, obviously, we would still attempt to grow quite significantly from our current state. Whether it would be exactly 2x or 1.9x is somewhat, that is a directional guidance. I mean, it is not that, a concrete hard number is being put at this stage. So we remain committed to that growth. We remain guided by that, that trajectory. Now, as we have said before, batteries would not give very high level of growth. Our best aspiration would be, it's a very matured, category. It is really the one that gives us the biggest amount of profitability, but it could at least grow in the high single digit. We expect a much higher level of growth from flashlights, primarily rechargeable flashlights sort of gaining stronger ground in the mix of battery operated and rechargeable. And of course, we have very high growth aspirations for lighting. And as I said earlier, these three categories we will exploit to the hilt. However, post 1 year to 18 months, the company will obviously also take some other category onto the mix so that doubling the turnover target can be achieved.
So just to follow up, on the lighting segment, there is a lot of competitive intensity and your peers are also growing really fast, some of them, especially the unlisted ones. And also regarding the flashlight, do you see such a big addressable market or is the underlying industry or the requirement so much that it will grow at such a level to compensate the lesser battery growth?
So let me first talk about the flashlight one. The flashlight one is inundated with unorganized players. We are by and large the only player and we are the market leader. Only because of our own hesitancy in order to get into the rechargeable segment that we have sort of, done a bit of stepping back, which we are trying to make good. So, we would see we are 50% of the battery operated market. It will be our aspiration to come nearer that level also in the rechargeable. So the addressable market is 1,200 crores and we are, around 175 odd crores. So we feel that there is a lot of headroom for us to grow there. So we have no really doubt about that. As far as the lighting part is concerned, the market is huge, it's vast. And there are many players. So, many players in a market have its pros also has its cons. The pros is that the entry barrier is simple, which is proved statistically by so many players playing in the market and existing and surviving. The con is, of course, like this has happened this year, that everybody passed on the manufacturing efficiency to the market, did not retain anything. So all gears are under compulsion to pass on the same benefit to the market. So we really think that this is a market which recognizes brands, even with two products, brand, Reliance plays a strong role. We feel that Eveready, with its strong brand and its distribution strength, should be able to make a reasonable dent into the market. And this continues to remain a focused growth market for us.
Okay, noted, sir. And just a small suggestion, sir, if we could kind of release some presentation at least half yearly for the product and developments, that would be really helpful.
Okay, thank you. That's a very useful suggestion. We have made a note.
Thank you, sir. Thank you for the question.
Thank you.
Thank you. Participants may press star and 1 to join the question queue. The next question is from the line of Kush Gosrani from InCred Asset Management. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, if you could highlight what was the A&P spend for this quarter as a percentage of sales, and for the full year, what it would be for this year and for next 2 years, how are you planning to decrease the A&P spend?
So this quarter, it was actually, as you know, the revenue was subdued. So it is around 12%. And compared to last year, the same quarter was 8%. And the YTD basis, 6 months, 9 months. So YTD basis is at 10% compared to the last year of 6%. So as we say that we stay committed to our A&P investment. And despite, a moderated revenue, we continue to our effort to ensure that the brand recall and the introduction of the new categories are on top priority. So we stay committed and we are continuously investing with a proper focus on that, right input and right communication goes to the market.
Sure. And, bit near-term question from my side is, are you seeing any signs post even your RTM changes of market recovery? Of course, the degrowth, as you have, as well as highlighted in previous questions, is that, the degrowth has been much higher than expectations. But in the near term, are you seeing some signs of recovery, or is it still challenging for the customer and for you as well?
So, as Shubham has already said that, we are looking for in a immediate quarter 4 some sort of bounce back. Why? It is a matter of another 1 or 2 quarters. But the good part is that we have identified the problem, a lot of work and started all that, because it's a massive exercise which you try to do in a quarter, actually it didn't take 2 to 3 quarters. So in a short term, we may see some recovery, but the full consolidation and settlement will take at least the next 1 to 2 quarters, I guess.
So just 2 questions from our first side, very quick. One is, before the RTM changes, how many distributors we had as super stockists, and what are they now? And one last question would be, rural versus urban mix for us.
Pardon? Can you repeat the second question?
So if you could quantify how much would be coming for you, sales will be coming from tier 2, tier 3 cities and from metro cities, do you do specification? If you could.
Prior to the RTM, we had about 4,000 plus distributors, which is now down to a little over 1,000. With regard to this, the split of turnover between metro versus smaller towns, and I would say that we are uniformly spread. So, normally people ask us rural urban split, we say it is 50-50. With regard to tier 1, tier 2 and metro, I cannot often give you an answer because it depends on what definition that we give for tier 1, tier 2, how many metros do you. But I would say that we are uniformly spread.
Got it. Thank you.
The point that I want to highlight is there is no specific center bias in our sales.
Got it. Yes. Got it. Thank you for your time.
Thank you.
Thank you. The next question is from the line of Vikas Srivastav from RBC Financial. Please go ahead.
Yes, good evening. I apologize. I've joined late, so this question may have been asked earlier. I wanted to know what the status of the arbitration was. Is the hearing over, and do we have that arbitration award? That was my first question.
So, the arbitration hearing currently stands adjourned. So that is at the request of the claimant that they have sought adjournment. Hearings were supposed to have commenced from this week, which has been now put on hold. So we really would like to hear from the claimants, I mean the person who has sort of made the case and take it there from. At this point, it is suspended.
At this point, sorry, will you repeat that, Mr. Saha?
It is adjourned at this point of time.
And we don't know what the next date of adjournment is. Are we engaged in some kind of settlement talks with the claimant? Where are we on this? Because if you remember, in about 1 year back, you had said that we expect closure by early 24.
There is a development. The reason for their seeking adjournment is that as you know, the original borrowing from the erstwhile promoters holding companies was from KKR. Now that was taken over by InCred. And now it has been taken over by another NBFC company. I don't exactly remember the name. And because that development has happened in the immediate past, that the claimant has sought adjournment. So, we need to see, how it goes. We are at this point of time really in some kind of, suspended animation, you can say.
And therefore, we are still, the restriction of the High Court of raising any fresh capital remains on.
That is really effectively the only restriction that is on us. Otherwise, business is carrying on in the normal things.
No. My second question, and I'm sorry if I'm asking this question again, was on the RTM. Can we comfortably say, I know RTM and it is a dynamic process, but we have started with Bain Capital, we had started the procedure and then it got delayed. The entire RTM infrastructure and systems in place. My question to you was that can we safely say as of 31st December, the initial bit of the route to market infrastructure systems, etc., which we were hoping that it would be in place, say, by 30th June of 2023. Are we done, or will it spill over into the next quarter also?
So the as far as picking up of the infrastructure and all the changes that were necessary to be done with this new RTM got done in the early part of the financial year, much well before 30th June. What happened was, we tried to do it in a very short span of time. And it made a lot of changes in the channel partners. That led to, some disruptions with regard to the partners selected not being up to the mark, or us leaving some areas a little vacant. So these are the disruptions, which took time for us to sort of grapple with, which we have by and large identified. And by 31st December, the question that you asked, the infrastructure was already in place and continues to be in place. Only those gap areas have been addressed and they continue to be addressed, but most of it is over. So, in terms of, can I say that is it 100% perfect? No, not yet. It will take us some more time, and as Vivek also said in his response just a couple of minutes back, it will take 1 or 2 more quarters to be fully, I would say 100% effective, but we are already almost there, and you would see a bounce back from the fourth quarter.
Very well. So what you are saying is that while we are not all there, but we are substantially there, and the benefits in terms of the sales, distribution and sales should be visible from the fourth quarter onwards.
Yeah, with many steps. I didn't give that caveat, but you love it. I said with baby steps, but here, yes, you got it. You got the spirit of it.
Yeah, we are almost there, and you were saying that hopefully by June, the March or June quarter will be all there. As far as the softer part of this RTM changes, etc., the infrastructure, the hardware, and the people and the appointments were there, but but the disruptions and the channel partners breaking into the system, etc., things should be all settled. Can I comfortably say that things should be all settled by 31st March, or you expect that to extend beyond 31st March also?
Maybe a little spillover to the first quarter of next financial year.
Yeah, but pretty much you're feeling good about what you have today in terms of the RTM structure, and you are looking positively in terms of it giving necessary results from the first quarter, the fourth quarter of this financial year.
Yeah, I would say so.
All right. Thank you so much.
Thank you very much.
Thank you. The next question is from the line of Dhruv Kashyap, who's an individual investor. Please go ahead.
Yeah, good evening, Mr. Shah. This is the first investor call that I'm attending, although I've been an investor for some time. So pardon me or bear with me if I'm asking something that's been asked in the last few quarters, but it will just be a healthy refresher for all of us. So it's a two-part question, and I'll try to structure it as sensibly as I can, where one part of the focus will be more here and now, and the second part will be sort of more crystal ball gazing or more sort of philosophical in its sort of spirit. So the way the business is structured currently, there is a battery business where we are the Hindustan leader of batteries. We are more than 53% market share, and there is only that much headroom left. Then there is a flashlight business where you are right that there's a changeover happening from battery operated to rechargeable. However, to the layman, there is always a bit of a existential question on this flashlight category, because there's always a tendency for other products to sort of take it over, like we've seen it in the past. And then there's a lighting business which is quite cluttered. And hence so one is to understand from you that what are really the initiatives other than sort of juicing out efficiency and RTM and product launches, etc., that you've spoken about. And the second part of my question really is that outside of these three, at a philosophical level, are we seeing that there are some adjacent categories? Or, for example, at a philosophical level, Eveready is the battery of India or the battery maker of India, and hence, are there adjacencies in batteries itself? So, for example, do we go to watch batteries, car batteries, phone batteries, or any other battery? So, is it like more a horizontal extension or a vertical extension? Because as someone who's used Eveready for I don't know how many decades now, personally, and as someone who's in a marketeer, I personally feel that Eveready has a unique situation where the share of mind is significantly more than the share of wallet. And that's always a great space to be in as a brand that people think you are this huge monolith of a brand, but actually the revenues aren't that big. And that's where the opportunity lies, because people already see you as a big brand, but and there is a lot of space to juice it out more, both in its current three categories as well as extension to very naturally sensible ones. And I know it's a longish question, but I conclude by saying that, I've been invested in a company for almost 8-10 years, which does something of a core business, and it sorts, and it has the same thing, that it's got a very good share of mind versus share of wallet, and it saw benefits in getting into appliances, which is it's essentially a kitchen and a home brand company. And ever since it got into appliances now become 90% of its business, and core is only 10%. And the company's market value has gone to 700 crores, close to 5,000 crores. So I'm just trying to understand from you that where will this next sort of exponential rocket come from?
Okay, that's Very, very involved question, I must say, and compliment you for the, the in-depth understanding that you have done on this. So you are very right. Eveready brand is larger than, what we deliver in terms of our top line. You are very correct. And obviously that provides us with a guidance that, we can do more. We can do more with the brand, and we can also do more with the distribution. Now, what would be the shape of things to come is something I'll take on a little bit later. But prior to that, let me say that the battery, as you rightly said, it's mature. There is very little headroom or headspace to go anywhere beyond the 53% or that, as you said, the individual like a stronghold on the market. Yet, I think the market has, and since you have done so much of, the deep dive into the category, as you know, the device penetration in the country is of a very low order. So there is a huge potential for the category to grow as and when devices proliferate, with, let us say, rising income levels of, so even if we retain that 53% market share, if devices were to go up, like it did at one time, we saw smartphones or medical devices proliferated during the COVID time, or when the remote controls came, with every appliance in the households. So, if tomorrow the country was to go over to electronic locks and, sensors and stuff like that, there would be a big jump, but that is as and when it comes. The category currently is in a position to deliver a high single-digit growth, which would come out of premiumization, and on which the company is really focusing and working over the last, I would say, 12 odd months. We have revamped our premium segment, and we have, started communicating quite a lot on that. And so, we feel if other things remain constant, we should be able to deliver a high single-digit kind of growth. That is as far as battery is concerned. Flashlight, I beg to differ with you on the category potential. That category is growing. The battery-operated one is, of course, degrowing, but the rechargeable one, people used to ask, because you seem to have a lot of knowledge of these categories. I mean, I think I appreciate you for that. Earlier days, people used to ask us that what would happen when the country, the villages, they get electrified. And what would happen to that? We would be at pains to explain to people that this is not for indoor lighting, it's for outdoor lighting that people use flashlights. And then electrification happened, and then it really sparked usership. Household the keeping of flashlights increased because, people have by this time discovered the charging point. So they charge the mobile phone, whatever it is, a smartphone or a feature phone. They also like to charge the flashlight. So in the rural side, where most of our flashlight usage is, there is no replacement for flashlight. It is only, we see growth in demand. Our problem is we are quite heavily over-indexed on the battery-operated one. So and that even emanated from the company's hesitancy to go into rechargeable, because it felt that, if we ourselves go there, what will happen to the battery-operated flashlights? But that is what the also got preferred. So, we have no choice. As we straddle this particular segment, we see potential for high level of growth. I mean, I certainly would think that, we can easily look at a mid-teen kind of growth in this segment. With lighting, it's a cluttered market. People are very correct in observing that it is a highly competitive market, but it also provides very low entry barrier. With a brand like Eveready and a distribution like ours, we are good to go. And it continues to be a focus area for growth for us. Now, coming to the crystal ball gazing, you are very right. We need to, sweat the brand a bit more. We need to sweat the distribution system a bit more. Exactly what will be that category, I am unable to say. We have lots to do over the next 12 to 18 months, and we will keep focusing on our existing businesses. But parallelly, we'll start working, trying to discover what could the adjacent categories be. So that is where we are. I'm sorry that I'm not being able to give you a hard-coded answer with regard to the future category at this point of time.
So that's perfectly fine, sir. I mean, thanks for that. It's a very exhaustive, comprehensive, and a very useful insight that you provided. I just want to understand more the philosophy in terms of, as you said, that Eveready is an imminently sweatable asset where it could sweat a lot more than right now by the sheer fact that its share of mind is much, much more than its share of wallet. But I was just trying to understand that one way to sort of build adjacencies is to say that, listen, we are the Hindustan lever of batteries, and hence we do everything batteries. The other way to do it is that there are adjacencies, and I can take thousands of successful examples of both. So I think, it's really for the team now to start working, because I unless you give your mind to it now, anyway, it's going to take 1 or 2, 3 years of sort of execution to get it sort of delivered. So it's more just for food for thought more than anything else. And lastly, before I sign off, sir, I'll share an experience with you because of what you read. I don't know if you find it helpful. You mentioned in Eveready that, there is an under-penetration of gadgets or devices. For the longest time, I headed ice cream for Unilever, which also depended on refrigeration penetration or freezer penetration. And we found multiple creative ways around it. So that was how ice cream is consumed. But, you build a case for out-of-home consumption where you don't need a refrigerator. Then you did home delivery. You tied up with Domino's, like Coke is delivered. Coke has a line for Domino's. We did ice cream for Domino's. So I'm saying there are thousands of ways to come around this gadget issue. I mean, I sold a category which needs to be at minus 25 degrees to be sold. But there are innovative ways around it where you can't wait for Whirlpool to keep selling more refrigerators. So I'm sure I'm just giving you food for thought, sir. You are an expert of this category. I'm just sharing my experiences to just understand where your mindset is at.
Thank you very much. It has been very insightful. You have given us a lot of food for thought, and we appreciate that. Thank you very much for taking the time out and giving your insights to us. Thank you. We'll work on this.
Thanks for taking my questions, and all the very best for the future.
Thank you. Thank you once again.
Thank you. The next question is from the line of Vipul Shah, who's an individual investor. Please go ahead. Mr. Shah, your line is unmuted. You can please ask your question. As there is no response from the line of the current participant, we will move on to the next question. The next question is from the line of Mithun Aswath from Kiva Advisors. Please go ahead.
Yeah, just a follow-up. I just wanted to know what is the breakup of your current flashlight business? How much is it battery and how much is it rechargeable?
So our 70% in terms of value, the 70% would be battery operated and the balance will be recharged.
And the rechargeable is growing at what pace in the current year?
It is really growing a very healthy pace, over 50% type of thing. Where on the other side, that the battery plastic light operated has 20% degrowth happening.
Okay. Thank you so much.
Thank you. The next follow-up question is from the line of Vikas Srivastava from RBC Financial. Please go ahead.
Mr. Saha, I'm back to the size of the market in terms of batteries and growth. Now, I do hear that we are waiting for some event. Now, in a growing economy, the middle class growing, why is it not that there is a good linear growth of battery, which should be normally the case? Is our hypothesis going wrong? Are the new remotes, etc., also the rechargeable kind? Is the battery life more? Is the technology higher? If you remember, a few quarters back we discussed and we were feeling very sanguine about about the potential of growth of the battery segment as a whole. Let me for a minute assume that our share in the battery market remains what it is. What in your view is going wrong on the growth which should normally be linked to the way per capita income and the growth of the middle class in India? So as we discussed earlier also, we are holding on to the market share of 53%. As the previous speaker said, we are the individual of the battery market. We straddle every, area of the battery market, and there is nothing that we keep unfulfilled. The thing is that the problem and there is nothing that we have done wrong. So I would like to correct it. Oh, no, I completely agree with you. My question is, you peak at 50%. Why isn't the size of the market growing as it is expected to grow? But I'm just asking you, see, as an investor today, I want Eveready to check all the points and do right. I also want to understand what in your view is the market, why is it not growing the way it should grow? Is the question I'm asking you. If the market grows 10, 15, 20% per year, my stable at 53 is good enough. It's brilliant. So please now hear me out. So the thing is that the battery market traditionally has always grown at low single digits. It is not that it has been ever growing at 15% or thereabouts. The reason why the growth rate is low is because unlike other countries, the per capita consumption of batteries in our country is very low, which stands at about 2 per person. Whereas in other countries, even let us say not the most developed country, China has a per capita consumption of 10, and America has a per capita consumption of 36. Japan has 27. So the reason is that battery, there is nothing which requires battery on its own. Battery only is used and consumed when there is a device. The device penetration in our country is of a very low order. Like for example, remote control. Remote control consumes 40% of our battery. Whereas in the US, remote controls where every household has more number of remotes, but we only consume 3% battery. So it is because of the low penetration of devices in Indian households that battery has really not seen that level of growth, as you very rightly said, with growing income, the country should have seen. So that is where it stands. We have the potential to grow the market. I'm not talking of ourselves. The market has the potential to grow. A small example like toys. The penetration of toys in Indian household is far smaller than what it is in many other countries like Indonesia, which is similar. Income levels are not that greatly higher, or China. So whereas Indians have taken out the phones, smartphones, feature phones, people have taken on famously. So that is some of the quirks of the market. We need to sort of review with that. The thing that we need to do is to ensure that we remain if the market grows, because at 53% it is very difficult to grow faster than the market. I mean, this is that. Yeah. I was never raising a question on the size of the market or our market share. I was just wondering, why is it not growing? Why is the market, it's still single digit? Because, that was what I was just thinking, if you have a take or a concern in your mind as to why the market is not going. I was more on the macro this thing of the market as to why it is not going faster. This we were expecting it to, and we do expect the gap between 2 battery per capita and 10 to fill up at some point of time. Appreciate. My second question was that, do you foresee the battery flashlights completely being becoming non-material in the next 3-4 years? That was one question. B, I'm not asking you for this quarter or next quarter, but how much in terms of, and for a minute, let's forget all the new products you will add that, later or they're in the pipeline. My question to you was on the lighting segment, what kind of CAGR internally are we talking of growing over the next 3 years? And what kind of annual growth are we expecting in volumes in the or what are we targeting in the chargeable flashlight segment? So, the first question whether battery operated flashlights will become zero, I would say it will never become zero, but it will become a very small part of the market. Very quick. Okay. The rechargeable one will continue to grow because people have really sort of taken out to it famously. With the houses getting electrified, people are sort of using it because they can do all their outdoor stuff without having to change batteries now and then. So we have an aspiration for the whole category. I am not now any longer looking at battery operated and rechargeable. We need to grow that because there is growth in the market. We are looking at, and as I said somewhere earlier, we have 50% leadership in the battery operated one. We do not see what stops us from becoming a 50% in the overall market. Also given the fact that we are the only organized player. The rest are all unorganized, local, somebody is doing something in Calcutta, somebody is doing in Mumbai, like that, UP. So we see a good potential for us to grow double digit, I would say somewhere closer to mid-teens in the longer term. With regard to lighting, we started off with an aspiration of growing beyond 25%. Frankly, I mean, even this year we have taken a target, but the market, the value erosion was so acute, again reflecting the competitive nature of the market. So we did higher volumes, but we ended up doing only 10% in value growth. The market is in the negative territory. So, people who are experts in the market, I have spoken to, other lighting industry leaders, they feel that this value erosion should sort of get arrested. And then, the normal growth of 10% in the lighting market is something which is quite normal. We being a small player, our growth of rate should be higher. It is difficult for us to predict what will be the exact percentage because, particularly coming off this very high value erosion here. So I do not know whether I have been able to answer your question.
So I think my takeaway is what you're telling me is that your aspiration is to grow at about 15% on the flashlight consolidated between chargeable and rechargeable. And while your aspiration initially in the lighting was 25% because of the low base and growth, would you like to put a range or figure? What would be your revised aspiration for the next 3 years on the flashlights?
So on the lighting, so we are.
I'm not asking you immediate. There'll be like.
I understand your query. So we being a small player, we started with very basic products, bulbs, lamps, etc. As we are trying to improve ourselves, this year we would exceed 300 crores in turnover. We are going from bulbs, patents to luminaires, to downlighters, panels, etc. Emergency lamp, which is part of our premium portfolio. With that, we feel our value growth should be far higher than 10%. As we are recording, even if I say that the market is not going to improve any time soon. So with our progress, our journey from basic products to more evolved products, and we have the portfolio today. It is our, as we become more experienced in the market, we will keep studying it and go towards the higher value chain, and that should give us, I would say, a growth which is going to be higher certainly than the 10% that we logged in this year.
Got it. But would you, when you say, are you talking about mid-teens, high teens? What are we talking?
I would say certainly, higher than
what are you aspiring for over the next 3 years is my question.
So
I didn't ask you for a quarterly.
fact, we aspired for a 25% growth, but that went a little bit out of the window. We would certainly like to, grow beyond 15 to 20 or thereabouts, depending on the market condition. Because well, valuation that was there in the market may disappear. And then it will give us grounds to grow higher.
Very good. Got it. Got it. Thank you so much. Thank you for taking all my questions, sir.
Thank you.
Thank you. The next question is from the line of Sunil Bojwani, who is an individual investor.
Thank you for the follow-up, sir. Sir, I just wanted to know that if we supply to any kind of institutions or defense services or forces, defense forces, state or central, there are so many industries, mining or like the army, that would require flashlights, or maybe even for the lighting segment for street lights or stations, airports, or have you looked into that?
Okay, so we do supply to institutions like the ones that you mentioned, but there is scope for improvement. This is one of our focus areas. Thanks for once again reminding me of.
Okay, so is that a considerable portion of the revenue? So if you could give a guidance into.
At this point, it is not very significant, but it is there. But we need to grow from our current.
I heard also in the recent past, we had discontinued some smaller appliances. And we had mentioned in the previous call that we might look into launching some smaller appliances in future again, as to leverage our brand like the other participants said. So are we looking into that in the near future? Or
so we have exited the appliance category. What is happening is, you call them appliance or you call them adjacent products, which go into the lighting shops. It is only that, like say for example a spike buster or a multi-point plug and stuff like that, so things of that nature which is necessary to complete the range. But we have exited the appliance category also.
Okay, so in the near future also we would not be getting into it or any adjacent products like this. Maybe after a year or two.
The adjacent products should be taken only to serve the needs of the retailer to complete the range, nothing else.
Okay. For now, we don't have any plans of.
No plans.
Oh, thank you, sir. That would be.
Thank you.
Thank you. The next question is from the line of Vipul Shah, who's an individual investor. Please go ahead.
Can you hear me, sir?
Yes.
Yeah, thank you for this opportunity. So I have a question only in terms of our lighting business. Is what is the target market for us for the lighting business? Is it metro or is it non-metro?
As I mentioned earlier in the call, we are pan-India. We try to focus on metros. We try to focus on smaller towns. We obviously also focus on the rural side, up to a 20,000 population village or town. So there is no specific bias.
Got it. But I come actually from a metro city, and in the city, whether it is a lighting product or whether it is an alkaline product, suffice to say that a lot of times or most of the times we don't see the Eveready brand, although we are patient shareholders. But the products are not visible on the shelves, sir. So that was the reason why I had a question on that.
No, I'll answer that question. See, we are a small player in lighting. For us to be available in metro, it takes time. We are a very, very small player. Our market share is currently 2%. So you would only find us in 2%, perhaps, if we take that logic. As far as the batteries are concerned, I am surprised. I mean, if you could offline, you can tell us, where you did not find Eveready, because, we are 53% of the market. it is inconceivable that you would not find our presence in the metro areas. Lighting, I understand, because we have a lot of work to do.
Fair enough, sir. I will take this offline, but for sure, you can take it from me that any store you go in Bombay, the prime alkaline product is the biggest competitor, and
Nothing wrong in what you say, and I like your point, but our entry at, I do not know whether you heard my opening remarks, we have just now launched our own alkaline, in a revamped shape, which is Eveready Antima. We have done a decent amount of communication, and we have taken, placement drives, which have been so far very satisfactory. We started that from September, and I am surprised. I don't know which metro you live, maybe.
yeah, I said I'm Bombay, sir, and frankly, sir, since yeah.
So, which part of Bombay? Just out of curiosity.
Uh, Sir, in proper Bombay city, South Bombay, and to whatever the offline small mom and pop stores, we go. No, as far it is very difficult to find the Eveready alkaline product. So to my mind, there is a big growth which is there, and it's a potentially a great growth driver. It could be, but sadly, we can't find Eveready alkaline anywhere on the shelf. So that was the reason why the question as to where the focus is.
Question. I understand your question and your concern. As I said that this has been launched from September, and so far the progress has been very good. Like I myself, it is part of my job to make sure go visit market and see what is available or not available. This Bombay experience, if you have seen in the recent past, is a surprise to me. I'll check this out, and if you have the time to let us know which exact part it is not, because there can always be a gap which needs to be rectified. I know that you would have found our real balance, but alkaline placements which started from September should also have been in the area where you went to. If you have not found, I have to then accept that there is a gap, and that we need to sort of fill up.
Thank you so much, sir, for your response.
I'll certainly touch base with my Bombay team.
Thank you, sir.
Thank you. The next question is from the line of Ketan, who is an individual investor. Please go ahead.
Yeah, this is Ketan here. Thank you for giving me an opportunity. I just wanted to ask that we see a lot of this torchlights and other equipments which are now available in solar rechargeable things. So does the company have any, see any impact from such kind of devices which are available in the market? And what is their view on this segment? And whether the company also has any plan to go into such kind of segment?
So the company used to have solar powered lanterns, not flashlights. But we found that the market was inundated with very low quality and low priced. We did not feel at that time that there is sufficient traction of the product with the consumers. In the event we have that technology, in the event we feel the market is amenable to that, we will do that. But at this point of time, these are basically absolute unorganized players who play in the market.
Okay, thank you.
Acknowledged. Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Okay. Thank you everyone for taking out the time to join us on this earnings conference call today. I hope we have adequately answered all your questions. If you still have more queries, please reach out to our investor relations team, and we'll be only too happy to address them. We endeavor to interact with you all every quarter through this forum. Thank you once again, and look forward to connecting with you again in the next quarter. Thank you.
Thank you. On behalf of Eveready Industries India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.